Okay, we had the market move lower on the Fed, dashing hopes that there will be a September cut. Again, I continue to warn inflation's starting to tick back up. We're going to get the PCE inflation. It's likely going to. We're going to get it this week here. I think tomorrow, I believe. It's likely to tick back up like we saw the CPI. And again, it'll be concerns that tariffs are now going to cause inflation. The Fed can't the Fed can't cut rates. Now, I still think we're going to get a rate cut later. We have the September meeting, we have the October meeting, and the December meeting. No meeting in August. We do have the Fed with Jackson Hole in August, but we have no meeting until mid-September. I think you will get rate cuts, but I think it'll be for the wrong reason that everybody is hoping. I think we'll see a sell-off in the market. We'll rebound to new highs. I think you'll start to crash. Part of it will be an inflation freakout. I think that'll be one of the catalysts as inflation ticks back up and we see Jamie Dimon's crack in the bond market begin to take place, where we see yields spike and the bonds collapse. Going to happen. I agree with Jamie Dimon on that. I think he is going to be proven correct in predicting the same thing. At a rally, we got a lower high, what could be a counter trend. I told you yesterday that I thought the market had likely peaked on Tuesday. Again, I've been warning you ever since we made new highs. I'm watching for a top. I'm looking for a top. Last week, I closed out my long positions and began to go short. Added to my short positions on Monday. We went higher on Tuesday. A bearish engulfing candlestick. I think there's a good chance that we have peaked based on a couple different things I'm looking at. I could be completely wrong. I'm just telling you what I think. Very few people will tell you what they think. I tell you what I think. Doesn't mean I'm going to always be right. I was right about the April 7th bottom. Everybody was calling for a crash. I predicted that we bottomed. I told you that the week before we bottomed that we were going to bottom that week and then called a bottom on April 7th. I had bottoming signals the 7th, 8th, and 9th as I talked about. Major key support. I'm expecting a pullback here. It could still go to the upper boundary, and I could be wrong. Again, I told you that's very, very possible, the upper boundary of the rising wedges. I told you again yesterday that I think that we have peaked. I think the top is in. I was calling a top. I could be completely wrong. People predict things after they already happen. I try to predict things as they happen or right before they happen. So I'm not going to always be right. I don't have the luxury of waiting like everybody else until after something happens. I have to use my mathematically based indicators, support and resistance levels, and again, look at things carefully, making predictions on the economy, like with tariffs. I've been 100% right about tariffs. Media has been 100% wrong, so have the bears. So we have the Dow down 171 points. It was down 0.38%. The S&P was down 7, almost 8 points. It was down, risen up about 25 points at the highs of the session, and then it dropped down to over 30 points lower at the lows of the session, and then recovered towards the very end, right before the earnings with Meta and Microsoft. Futures went right back up to the levels, the highs of during the session in after hours, turning back to positive. So we'll be watching to see what happens. But NASDAQ up 0.05%, down the S&P down, the NASDAQ up slightly, the Russell down about 0.5%, the VIX was down 3.13% to close just under 15.5. We have Meta and Microsoft earnings. We had Microsoft first, and stock is up about 7% in after hours. We saw the futures rebound immediately. That right after Meta reported, shares also climbing about 10% based on this article on CNBC. So in after hours, we got Meta and Microsoft, which are both rising in after hours, helping futures in after hours. Tomorrow after the bell, we get Apple and Amazon. So we'll be watching that along with other key earnings. And more earnings next week, this week, and next week. A lot of earnings. The S&P 500 earnings. We'll see if the rally can continue in after hours, because tomorrow we're going to get the inflation data, I believe, before the market opens. I think that's tomorrow. Let's take a look. And here it is, the last trading day of the month, July 31st. Tomorrow we're going to get the PCE inflation data. Now, the year over year is expected to come in higher than the previous reading at 2.5. The 2.3, and the core is expected to be right in line as it was last month on a year-over-year basis. Month over month for both is supposed to be 0.3% for the core and the headline number on a month over month basis. We'll be watching this number closely. Again, it comes in hotter like it did with CPI, then again, that might cause concerns. Powell out there today still concerned about the tariffs. And Friday we'll get the jobs report. It's expected to come in at 100,000. The unemployment rate is expected to tick up to 4.2%. Today we got the GDP. The GDP came in better than expected. The GDP came in at 3%. It was expected to come in at 2.3%. This is higher than the 0.5% previously given last quarter. Sorry, negative 0.5%. And remember, that number came in negative. We had a little knee-jerk reaction. We still closed positive with it. Told us, oh, we're going to have this massive negative number. GDP for the first quarter. We're in a recession. It's going to end the or the bear market rally. And I told you we had just broken out, and I told you that could give us a back test. It did, and we ended up closing positive. I told you everything the bears continued to tell us all the way up. Rally that we had that they told us wasn't going to happen, that I told you was going to happen, and when I told you when it did happen, they were going to call it a bear market rally, and then we're going to go make new highs, and then they're going to go, no, this is really the top right here. We're going to sell off right now, then we're going to pull back, and then we're going to go make new highs. And then we're going to get the real top. Bears will, throw in the towel. The herd will be lulled into a false sense of security, as they always are. But the GDP coming in better than expected. The market really didn't have much of a reaction to it because it was focused on the Fed. Well, number makes it less likely the Fed is going to cut in September. So why, the economy still got a good number here. Why would the Fed cut? And again, I told you the people that were telling us this negative number. Remember, the Fed was off by 2.4% in their prediction. They were expecting GDP to be around negative 3%. They were way off, as the Fed always is. We didn't get a rally with this. We tried to get one ahead of the Fed, and then with the Fed, we tried it a little bit there with Powell and the statement release, and then it fizzled out. We got a bear flag. I'll show you the chart. We broke down and recovered at the end of the session for the earnings that were going to be out in after hours, Microsoft and Meta. So we're rallying in after hours. The question becomes now, can we hold on to the rally, or do we end up selling off with the inflation data tomorrow before the market opens? We're going to get that inflation data. Fed's favorite gauge of inflation, the PCE inflation data. If it comes in hot here, as we saw with the CPI, I think that could trigger a sell-off. Watching the month over month and the year over year numbers here for the core and the headline number. So tomorrow we got the PCE before the market opens. Then we got after hours, we got Amazon and Apple, and then Friday morning we'll have, start off the new month, we'll have the jobs report, and this is the day that Trump's tariffs begin to kick in. New tariff rate. Again, you got people all over the internet saying, oh, this is going to get paused. This is going to be delayed. Trump's not going to go through with it. Trump's wrapping up the deals here by Friday. Some countries are going to have a tariff rate here. Whenever they finalize that number, maybe they have. I haven't seen the news about it, but the Commerce Secretary said that still working on that earlier in the week. I don't know if they had that number yet. I haven't seen anything about that yet. Maybe they do, maybe they don't. They're going to have a tariff rate. This date is set in stone. It's not going to go away. So the herd is about to get a reality check. These are the people that told us crash on the tariffs at the bottom. I told you we were going to bottom and they were going to be paused and delayed and reduced so negotiations can happen. I was correct. These tariffs are going to be set in stone now because the tariff deals are wrapping up. These people that don't see this are completely oblivious. I've seen post after post on the internet in the last 2 days that the tariffs aren't going to happen. And we already have tariffs. Even the deals that Trump has made have tariffs in them. They have unlocked markets in other places in Europe and Asia. A great deal with Japan there. And these deals are pretty good deals. A lot of them are pretty good deals with the EU and Japan. He had told us this wasn't going to happen. Yet we're seeing the tariffs go away in the EU. We're seeing tariffs go away in Japan. Told you that was what Trump was trying to get accomplished. Now the people that were blindsided to everything at the bottom are now telling us, oh, no, we're going to just keep going. Blindsided at the top, and I told you we're going to get a top here, pull back. Again, we're in the final phase of the blow off top and we're going to finish it and complete it. So again, report the inflation data and then more earnings with Apple and Amazon after the bell on Thursday. What the market looks like by tomorrow's close with positive earnings for Meta and Microsoft, which are up in after hours, and futures are up in after hours. You're right about the Fed. Again, Powell concerned about inflation, concerned about Trump's tariffs causing inflation. So again, Powell canceling a rate cut for September, dashing all hopes of a rate cut. And that's what the sell-off was about today, dashing hopes of a rate cut for September. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, please let me know that by supporting the channel today. If you follow the link below, it'll take you to a secured site and you can donate any amount you want or make it a recurring donation. If you do that, I thank you. I just ask that you do that rather than try to sell you stuff here. Sponsors are always contacting YouTube channels to try to get them to sponsor their content, and I turn those offers down. I don't want to do it because I don't want to sell you anything. Please consider helping out today. Thank you. Fast, we got a red bar in the oscillator. I told you to be watching for that. Got to take out the 10 period, take out the lower boundary of the cloud, take out the 20 period if we're going to flip momentum. Okay. Futures were rallying in after hours, Meta and Microsoft earnings, but we're still getting another red bar. We'll see, do we move to a new high? We establish a lower high, and Tuesday's high holds. We'll be watching that. Got the divergence on the oscillator. You've got the divergence on the MACD. Multiple point divergence. That's usually associated with a reversal. Same thing with NASDAQ. We got a reversal bar on Tuesday. We got a doji here today, but we're bouncing at the 10. You got to take out the 10. You got to get the signals turning bearish if we're going to turn. There's still risk of going to higher levels. Again, my signals remain bullish. I expect the divergences are going to change them, but we might buy more time. Those divergences are not yet done. I told you I thought they were done. I could be completely wrong about that, but you could see the divergences forming as well as I can. So we'll be watching. Drop below the 10 period moving averages tomorrow. Do we get the red bar and the red cloud? We buy more time. We got a candle of indecision in the form of a doji here on the NASDAQ daily chart. Got green bars here. S&P got a red bar, but we have green bars going on again. Multiple points of divergence developing. Got to see those red bars. They may show up after the sell-off begins, or may happen as it's happening, but again, got to see those red bars. I expect we're going to see that. I think you got a good shot that we have a peak in, but that is just my opinion. My signals still remain bullish, and we still may go to new highs. I continue to warn that. Very closely, we hit this trend line and we bounced, and we're forming these bullish divergences down here in the RSI and the MACD and the stochastic, which has turned back up. But today we had the rally, fizzled out in the last 25 minutes or so of trading, and we recovered at this topping tail on the VIX right there at the trend line, right here at the 50 period moving average, just below that 50 period moving average. So this is topping tail allow us to go up and hit that upper boundary of the rising wedge. We still may hit it. Yeah, I thought that we had a good shot of a reversal yesterday's bar, and we got that bearish engulfing, but VIX still may hit this boundary again and still may attempt to move to the upper boundary of the rising wedge in the S&P. I told you I thought that the bearish engulfing candlestick very well could be the top. I was looking for a top, but I told you yesterday I think that this is it. I'd be wrong about that if the S&P tries to reach that upper boundary, which we talked about in great length and detail. But watching this closely, we tried to get above the upper band, pushed right back below it, got a little topping tail here, an inverted hammer, and we go higher and break out of the bullish falling wedge here, and this bullish divergence plays out, and we see the RSI go above 50, and we see the MACD go into positive territory. Or do we dance around here a little bit more and end up seeing the S&P going to the upper boundary of the rising wedge by a little bit more time? Now, we did breach the trend line ever so slightly yesterday and then today. So if we do rally in after hours, it would just be a back test of the trend line tomorrow, and then we could resume the decline, but we're bouncing off the 10 period moving average. So again, if we can get back above the broken trend line, then taking it from this low here and this low right here to the bottom April 7th there. If we can get back above the trend line, you still could go up here, but I told you I think we've got a top here. I could be wrong about that, but I have the guts to tell you what I think. People don't have the guts to tell you what they think. If we do try to get back above the trend line, we try to go back up there, then the RSI might form a little divergence right here in the most recent price action. It didn't right here. It went above this previous peak. It reached a reading 77, and then it began to come down here. So again, do we have now a breach of the trend line that will end up taking out our 10 period? Do we get the inflation data tomorrow morning and the whole after hours rally ends up fizzling out? You know, you have the rally with Meta, you have the rally with Microsoft and futures going back up and testing today's high, but is it just going to end up being a back test, or does the rally end up fizzling out with the inflation data that's going to be reported before the market opens? We'll be watching. But I'm watching to see if this extreme has marked a peak with their bearish engulfing. I'll show you this up close in a second. In order to get a bigger self, you got to take out the 10, you got to take out the cloud, you got to take out the 20 period, the blue line right there. And again, take a look at the MACD. Look at this. Again, we rolled over yesterday. We had turned up. We got that lower high. Talked about that. And then yesterday with the bearish engulfing, we rolled back over. And you've got a divergence now in the most recent price action. You've got this large divergence from the peak over here in May to the peak over here, the July 3rd high, and then now with our peak from yesterday. I told you, I think we've got a peak here. And if the PCE comes in hot and the market begins to sell off, we could erase the gains with futures and after hours and come and resume the decline. Even back test by the time the market opens. Keep that in mind. The stochastic rolling over, it's got its own divergence going on there, but it's still above the 80 level. We got to break that if we're going to see this rising wedge begin to now play out. The people down here that were telling us we were going to crash, Bears and Kramer were telling us we were going to crash, and they told us this rally was never going to happen. Now they're saying it again right here. Oh, the top's in, and I told you that was going to happen. Plus, we had a bear market rally all the way up, which I told you was going to happen. Herd was agreeing with the bears down here. Now they're agreeing with the bulls up here. Oh, there's nothing taking this market down. Tariffs are just going to be delayed. Don't worry about that. And again, a reality check is coming. The herd is fickle. They believe the bears down here. Now they believe the bulls. Didn't think we could rise at the bottom. Now they don't think we can fall, and we're probably going to pull back towards the 200 period here, moving towards it, or maybe tagging it, or just beyond it, and our cloud here in all likelihood. From the 6,400 peak we just made, just above 6,400, I think you're going to end up dropping 400, 500, 600 points, and then I think you're going to go make a final high. I think we'll complete the bull market top. I think these divergences are going to play out. Now again, I think that the peak is in. I could be wrong. I have the guts to tell you what I think. That I thought that this was the bottom. I predicted we were going to get the bottom the following week when everybody was saying we were going to crash. I was right. Here I'm predicting that we're about to get a top, and I'm telling you, I think it's probably in. I could be wrong, but that's what I think. That's my opinion. I do not know the future. I'm just telling you what I think. Well, I said yesterday, I was looking for a top. Yesterday I told you I'm calling a top, but I could be wrong. The S&P hit that upper Bollinger Band and turned off of it with the bearish engulfing candlestick. If we go back and we look at December and January and February here earlier, several months ago, again, you can see that we got rejection at the upper band here. We got rejection, closed above it, closed back below it, got rejection in January. And then again, same thing in February. Do we have something similar here? I think that's very likely. I told you we might go above the upper band and try to go to that upper rising the upper boundary of the rising wedge. Still may happen. I think it's more likely we turn here, and that's why I'm telling you I think we got a top, but I could be completely wrong. Just telling you my opinion. Rising wedge, we broke down ever so slightly yesterday. Could be in backtest mode today. We got a candle of indecision in the form of a doji. If we can go higher above the upper band, we got rejection at the upper band there. If you can get it back above it, you can go to this upper boundary of the rising wedge. If you get rejection at the trend line, you can go lower. If I bring up the 10 period moving average, you can see the little red line right there. We're right at the 10 period, just like at the S&P daily. Again, both of them bouncing off of that 10 period moving average. If we break it, then we can start seeing momentum begin to shift. Right now, momentum is still bullish, trend signals are still bullish, but we have these divergences. You can see the divergence here on the MACD here with NASDAQ. The diversions here on the RSI, almost two equal peaks there, Class B diversions. But again, got to take out these 10 periods. We've broken the trend lines. Got to stay below them if we're going to see a bigger sell-off. Does the Meta and Microsoft rally fizzle out for the market? The PCE data comes in higher than expected. Does the market end up selling off with that? Or does Trump rattle markets or some other catalyst? But again, I'll be watching. It comes of yesterday's reversal bars. Back to the S&P, I'm going to show you this up close as we've broken the trend line here. We're right at the 10-period moving average. Show you the bearish engulfing candlestick and what I'm looking at. Now we had dropped about over 30 points at the lows of the session, but we recovered at the very end of the session. In order to confirm this bearish engulfing candlestick, which again, if this is going to mark a top, you got to get confirmation and a follow through. Far, we don't really have it here on the S&P. We did on an intraday basis, but then we bottomed out, we recovered. We only ended down about 8 points. We needed a good solid close below this low, and we didn't get it. Below the low of the candle. We did close below the lower end of the real body, but you need to close below the entire candle to confirm it and then get a follow through. We'll see if that still happens. Are we backtest mode with the breakdown of those trend lines? Watching, but does this high hold? I'll be watching that. We did rally up. We got a lower high, and we formed a bear flag on the intraday charts. I'll show it to you on the 15-minute chart. That gave us a sell-off, but then we recovered ahead of the Microsoft and Meta earnings. Rallied with futures and after hours back up to the highs for a test that we were at during the session. So we'll be watching. That rally buy us more time. Does this hold as a peak right here? I told you I thought it would. I could be completely wrong. Or do we see the PCE or something else, Trump rattle market, whatever the case may be? The jobs report on Friday, earnings. You see the rally in after hours fizzle out, end up confirming this candle, and eventually kicking off the larger corrective move. Watching this closely, we have a bearish engulfing, but it's not yet confirmed. We don't have a decisive break. We pretty much closed right at that level of the low of the candlestick there, right at the 63 area. NASDAQ 100 got a reversal bar. We went up and we got a reversal bar, but again, no confirmation to that. We got a candle of indecision. We rallied up to get a lower high so far. You got a candle of indecision. Does that take us higher, candle of indecision, or does that take us lower? And eventually we confirm this reversal bar. Maybe tomorrow we'll be watching to see how this unfolds. I do think you got a good shot that we have a peak in on the NASDAQ and on the S&P. Just telling you my opinion. I could be completely wrong. Again, we have no confirmation, and my signals, which are correct, still remain bullish. Here's what's going on. We had that gap higher yesterday, and then that gave us this black candlestick in the 5-minute time frame and on some intraday charts, and we sold off, and that gave us a bearish engulfing. And then we rebounded back up today, and that formed a bear flag. I'll show you on the 15-minute chart. This formed a bear flag as we overthrew the 200-period moving average. And then we sold off with the Fed, recovered at the very end to close just slightly lower, about 8 points lower. We're still below the 200. We're still below the 50. Now, futures rebounded back up to test these highs. And after hours, we'll be watching. Does that rally continue, spill over into the session tomorrow, or does it fizzle out overnight? When we get the inflation data, PCE, before the market opens, an hour before the market opens, the futures end up coming back down to these levels, and do we end up selling off with the PCE or some other catalyst? We'll be watching. 50 is still below the 200. Tried to get back above it. It failed. So again, I'll be watching that. Now, I'll show you the bear flag here on the 15-minute chart. I was watching this closely. I think we have a gap and trap here that has likely given us the peak with our bearish engulfing candlestick that is yet to be confirmed on the S&P 500. So here is the 15. This is the 5 here. Let's take a look at the 15. Again, here is the 15. You can see these are the divergences that I was looking at for the potential reversal. These are the actual divergences that I'm playing right here. Tried to sell into the rally here. Highs on Thursday and flipped the trade. I got stopped out at a very tight stop in, and then resetting another short position on Friday and Monday Surrounding this trend line right here and this divergence that developed. You can see the divergence that I'm trying to play in. We have the same divergence going on there in the 60-minute time frame. We ended up going a little bit higher. That gave us the bearish engulfing candlestick, a possible gap and trap. Got another black candlestick here on the 15-minute chart. Rally back up today, got back up to the cloud here, just above our 50 period, just above the 200 on the 5-minute chart, the 50 period here. Formed the bear flag, and then we saw the breakdown. So again, futures and after hours coming back up to these levels. We'll see rally fizzle out, or does it give us a recovery now and we end up going and try to make new highs towards those upper boundaries of the rising wedges on the daily charts. We'll be watching this closely. Divergences did play out nicely and giving us a sell-off. We'll see what happens in the PCE data, the Amazon and Apple earnings after the close on Thursday, and then the jobs report on Friday. But again, I've talked to you about that I expect, again, new all-time highs. We were going sideways for several weeks there in July. I told you the seasonality could play out. We could still go up to this upper boundary, slamming into the trend line in the weekly time frame, and I told you that could cause a turn, which it so far is. Don't rule out that we go up to this upper boundary. That's still possible. Did break the trend line, but we're still holding at the 10 period. In order to get a bigger sell-off, you got to take out the 10 and the 20 in the cloud, the momentum cloud there. So far, we're bouncing off the 10. See what happens Thursday and Friday. But I think, again, if we do have a top end, which I told you I think that was likely the case, I could be completely wrong on that. Again, I think you're going to move back to the 200. You're going to get your wave 4, going to get your wave 5. And then, again, September, October, I think the market's going to peak and you complete the cycle top. I think we have wave 4 here. I think you'll get wave 5 up here. And I think the bull market will come to a conclusion. I think you'll get a bigger crash than what we had over here. The reason why I wasn't predicting a top over here is because this is corrective. And again, I told you that's why I was predicting a bottom. Bears needed a 5-leg push down, not a 3-leg push down. Have a top in the market. It's correct. I think you have a 5-leg push higher. I think you'll complete it here. And then I think you're going to get market starting a crash, and that's when I think the Fed is going to panic, and I think that's going to be after a peak in September or October in all likelihood. So, maybe we get the Fed panicking in October or December or something like that. In October, we end up peaking in September, but we'll be watching to see how it unfolds. But I do think we will get the jumbo cuts once the Fed panics, once we top. But I think this is going to be a pullback. I am expecting a bigger pullback than the ones that we've seen. And then I think we go to new highs, and then I think we get the real top. Not some fake, phony baloney, plastic banana, good time rock and roll fake top, but the real deal Don steel. And again, I think we go to 65 to 6,700 up in here somewhere, getting these levels from trend lines in the weekly and the monthly time frames, the target levels that I've been talking about. A couple of trend lines in the weekly, and then I've got a higher one in the monthly that I don't think we're going to reach. Right now we're turning down off of the trend line in the weekly right here. I think that there's a good chance that the sell-off has started. We're at a couple of interesting trend lines right here from the previous highs in January 2022 and just before that, connected to our recent December high. Well, we're just below that area. We still might reach it if we try to go to that upper boundary of the rising wedge in the daily time frame. But we're at this level of resistance. And again, eventually, if we do pull back here or hit the trend line and pull back, again, I think you're going to eventually try to move to this upper channel line up here. And again, likely moving towards 65 to 6,700 or so, trying to reach the upper boundary there. If we pull back first, we could reach 6,700 area, 6,600, something like that. We're just under this trend line right here. And then this is our log scaling. Look at our linear scaling. We have a very interesting trend line as well. The linear scaling from the 2023 low to the higher low right here. We have this trend line and we're slamming right into that, just slightly overthrowing it. We broke down from it with the sell-off from the February high. So again, do we end up selling off here at this trend line and then going up to this upper boundary? Now this is a trend line. Again, when everybody was calling for a crash, I was telling you we were at key support, horizontal support right there. Both the NASDAQ and S&P and Bitcoin were all at key horizontal support. And here we are at the rising trend line from the 2020 low to the 2022, 2023, and right there, if we exclude the shadows right there, the blue line, the red line includes it. hitting a major support level, confluence of support with the rising trend, horizontal trend, and that gave us the bottom. That's why I told you when everybody was calling for a crash, you're hitting major support. You had your 200-week moving average directly below, and I told you we were going to bottom and rally to new highs. Actually, I think we're going to this upper boundary right here, the red line or the blue line. Again, one including the shadow, one excluding it here. And again, that could take us towards the 6,700 area. So just some levels I'm watching with the linear here and the log scaling I just showed you. But we're hitting the trend line here and the other trend line, the 2022 high. Now the 2022 high, I'm using that as a parallel boundary here that's pointing higher. So again, you get different information from using the different scaling, the linear and the log scaling. This channel goes back to 2020. The other channel goes back to the 2022 low. So again, just looking at this information, and this is our log scaling again. So again, I think that these trend lines are likely where we're headed, 6,600, 6,700, but I think you're probably going to get a pullback here if already topped or go a little bit higher and pull back, which could, but I think it's more likely we peaked, but I could be completely wrong about that. It's just my opinion. Peaked, if the S&P has peaked and my divergence plays out here, I told you I was watching to play this divergence. I'm playing this divergence. If it plays out, then we get an ABC move down for 4 and then eventually go get the higher level. But right now, I told you, divergence so far has given us a top. Tuesday, it still maybe we end up getting a larger divergence. That's certainly still possible. Remember, my signals remain bullish. I'm speculating on some divergences that may not be done. I told you I think they're done, but I don't know the future. I'm just telling you, speculating on that. If they do play out, then my signals will begin to turn bearish. In order for it to play out, and let me move my line here so you can see it, we got to hold below the 50 period. We dropped below the 50 period here ever so slightly, closed pretty much right at it here in the 60-minute time frame, and we bounced off the 10 period in the daily. You got to take out both of them, the 10 period in the daily and the 50 period here in the 60. We're going to have a sell-off. So again, I'll be watching the divergences here closely. The MACD's got to go negative here. It's come right here to the center line. Does it firm up and we get another push higher, or does it go negative and the divergence is now done? So again, we'll be watching that. Thing here, I'm speculating on this divergence here in the 60-minute time frame on the NASDAQ, along with the divergences in the daily time frame. We have the oscillator and the MACD, but again, does it now play out? Or am I wrong and it's not done yet? We'll see what happens. I think it's done. I could be wrong. So far, our high from Tuesday is holding. Right here, we're at the 50 period. You got to take it out if we're going to get a bigger sell-off. Again, I think the same thing is going on here with the NASDAQ as with the S&P. I think we've completed a wave 3, or if I'm wrong, we go a little higher, but we are breaching that trend line ever so slightly. Let me move the line here so you can see it ever so slightly. But again, if we have a doji that resumes the advance and watch the upper boundary of the rising wedges. Again, I think we've topped or about to top, and I think we're going to get the wave 4 and then the wave 5, and I think the bull market will come to a conclusion. These stochastics rolling over, but we've remained at extremes for an extended period of time. We've rolled over before. Does this one take out 80 and we complete the divergence? We'll be watching here.